Welcome to Ring the Bell Investing with the Masters of Marketocracy. Tonight, Glenn Brownworth joining me from the East Coast, and yours truly, Tony Mitchell in the Midwest. Last month, I said the president's rattling the markets every week since his inauguration, talking about tariffs. At that time, it was up and down, but in the last 2 weeks, it's practically all down. Glenn, are you concerned it will continue? And do you feel that we're around the bottom of this correction? The NASDAQ entered correction territory last week. It's now down 14.2% from its recent high. The S&P just entered correction territory today, down 10.1%. The Dow is technically not any correction yet. But how do you feel about it? Where we're at, what do you see happening?
My personal opinion is this is a lot more than just a correction, because a correction has to do with more market fundamentals. And right now what's happening is this dumb trade war over tariffs is just freaking everybody out, and it's just causing problems. That's why I think correction is actually kind of a misunderstanding of this. It's basically everybody freaking out and dumping, and I don't necessarily call that a correction. It would normally be a correction, but now I think it's people just freaking out and kind of running for the fences and trying to cover themselves. So I think we actually have more, unfortunately, I think we have more room to go to fall, actually. Probably another couple hundred points on the S&P, perhaps, because people are just, they're unsure what to do. And considering a lot of these larger companies are in the S&P, if people are going to bail and take their money out, it's just going to affect the whole of the S&P.
Glenn, it's hard to disagree with you. And I feel like at this point, we can go either way over the next few weeks. We might get a little bit more back and forth, not as much down, but then again, it's very hard to say right now. I do feel like at some point, and it could be in the next week, it could be in the next 2 weeks, it might take 3 or 4 weeks, but I feel at some point we are going to bottom and rally hard. And that's why I'm hanging in the market. I don't foresee a recession. So I think this is a buying opportunity, but you have to be cautious buying and not put everything in at one time. Let's go on and talk about CPI and PPI. They both came in cooler than expected yesterday and today, but it didn't help the markets, even though inflation is a major concern out there. How are you feeling, Glenn, about inflation? Is it a concern? Is it not even thought of right now with everything else going on, or is it the main concern because of the trade tariffs?
I would probably say it's probably the main concern, because if these dumb tariffs keep happening at 25% or anything above, there's no point in running a business, pretty much. It basically wipes out any kind of possibility of a profit. And here's the thing. The trade treaty that was created years ago was created by Donald Trump with Canada and Mexico. He created that trade, agreement with them. So now he's criticizing it. That's why I think there are other things going on, and I think this is just it's not even about trade. It's about grievance. Us and Canada and Mexico, we are each other's largest trading partners, and we buy some more from them. They buy some more from us, and $20 million an hour goes back and forth. And this is just spiting, cutting off our nose to spite our face, when it's just petty. It's like petty, like playground kind of BS. And I think that inflation, I don't know, inflation was fine before, but if this keeps going and everybody doesn't know what to do, and all the prices go up for everything, it's gonna be a butterfly effect. It's gonna be a ripple through the whole economy. And if it keeps going on, it'll be too late eventually.
Well, I hope that it doesn't keep going on, because I agree that it could become a big ripple. I'm hoping that we get some resolution over the next couple of weeks and we get the big bounce that I'm expecting sooner rather than later. Of course, hope is not a strategy, so I shouldn't frame it as hope. And obviously I'm a little on the optimistic side, but you have to be if you're an investor. And inflation, it could go higher if we end up with all these tariffs. It certainly is going to be a problem. On the other hand, we're putting a lot of people out of work, and that is not inflationary. That's deflationary. So it's a very peculiar and interesting time right now. And we'll have to see how it all plays out. As I said, it could go either way. I do feel like there will be a bounce at some point, and it's going to be a hard bounce. So we'll see. We'll see what happens. But I tend to lean toward the side that we're going to have a good bounce sooner rather than later. Let's move on and talk about the war, because that was, I thought about it this morning, and that's been very concerning to me. It's been going on for over 3 years, and whether right or wrong, the markets have almost forgotten about it. But now, with the president pushing for a ceasefire, something is going to happen really good or really bad. Either we're going to resolve this war and be done with it, which will be really good, or maybe Russia doesn't agree to the ceasefire, although I saw some headlines today that in principle they were going to agree to it, depending on all the details, of course. How are you thinking about the war? How much is it playing into your concerns for the markets? What are your thoughts on that, Glenn?
Well, after 3 years, the Russians have lost 10,000 tanks, 23,000 APCs, and 21,000 cannons. And it's getting worse every day. They've lost 890,000 troops with probably about 300,000 dead. It's not going anywhere. But the truth is, the Russians have a 500-year outlook on this, and they want to turn the whole world into the Russian Empire. And right now, the ceasefire is the one thing they don't want to do, because they know that both they and the Ukrainians will both reinforce during a ceasefire. It doesn't really mean anything. And it's basically, I really believe that that Ukraine called Putin's bluff, and they said, you know what? We're going to be the ones going for peace. We want the ceasefire. We're willing to do it. And when Putin is finally put to the test, he's not going to do the ceasefire, because he has issues in Russia where they think that Vladimir Putin is going to give away their mineral resources to the West. They have propagandized their own people so much that right now he couldn't even do a ceasefire if he wanted to, because the people in Russia, the ultra-nationalists, think that he's surrendering or capitulating. So basically, both sides are in a kind of a catch-22. He can't do the ceasefire because the people there will flip out, but he needs time to regroup too. But what they're going to ask for in this treaty is Zaporizhia, which they don't have. It's a city of 1 million plus people. They're going to want all the troops removed. They're going to remove all the sanctions. They're going to ask for, the way they negotiate is they try to get 100,000% of what they really want. And if they get any of it, good. If not, but they always try to get more than they actually have. And that's what they're going to ask for. And it's just going to be a joke. They're going to turn them down. So So
how do you think it's going to affect the markets, Glenn?
Actually, I think if he turns down the ceasefire, it'll actually probably make the market go down more, because people know the war is going to keep going on for a while. At that point, it'll probably make the market drop. But as I've seen in the past 3 years, after 2022, the war started, and the market kind of took it in for a while, processed it, and then 23 and 24 were great years for the stock market, even with what's going on. So it's bizarre.
I think, Glenn, you're right about the fact that if he turns down the ceasefire, the markets will go lower. And I would retract my statement about a major move up sooner rather than later if he turns down the ceasefire. I think it'll cause a lot more problems. Yeah. And then I would get a lot more negative on the markets right now. That is a big concern of mine. So we'll be watching that closely. I thought the news today, I guess it was just not taken to heart that he was willing to enter into the ceasefire was good news. I haven't seen much more about it yet, though. So we'll see how that plays out. Glenn, let's talk about the Mag 7. It's struggling more than just a bit now. Last month, I think I talked about it starting to struggle, but it's certainly more than just a bit. As I mentioned earlier, a lot of it drives the NASDAQ, and the NASDAQ's down 14.2% in that correction territory. And even Meta, that closed higher for record 19 days when we last met, has now given up all those gains plus. Jim Cramer said this week, there's no more Mag 7. I heard him say, I named it Mag 7. I can take it away. There is no more Mag 7. What say you about the Mag 7?
Well, it's a nice term, but the truth is those companies have been like the engine block for the U.S. for the past 10 years. You know, we might hate the fact that they're giant monopolies and oligopolies, but they're U.S. companies and they make something that everybody wants. You know, people use Amazon, they use Microsoft, they use Netflix, they use, NVIDIA, they use these products and they're in demand. If everybody wanted a pet rock and, NVIDIA made pet rocks and everybody wanted one, that's supply and demand. And even though the market's down, these guys still make a lot of money selling things like Amazon. Regardless of what's going on, you're still probably going to order something on Amazon. You got a subscription, you got groceries, you got something. So, one thing Bezos always understood is the cash flow. No matter what, there's always cash flow coming into Amazon, regardless of what's going on in the economy. And companies like NVIDIA and, they're selling GPUs, and Meta's selling a lot of advertising. So I guess people might want to actually go online even more and make more money off of the advertising. So they're making profits. But I think a lot of these companies they do get overheated because they're successful and they're popular. And there is definitely the popularity contest mechanism definitely exists in the stock market. But right now, I think people are just, trying to take some off the top and lick the wounds for a while and see what happens. Because this is very bizarre from a normal market correction for these kind of companies. But they're still making profits. That's the thing. But we'll see in 6 months.
Yeah, and I think the majority of them are still good buys, especially right now. Meta, I think, is at a point that is a great buy. I like Amazon. I like Google, even though it's going through this potential breakup with the government. I think there's a lot of value in Google. Apple, I think, can go lower, but I think in the long term, Apple's going to be good still. And I do like Netflix where it's at right now too. The one that I really don't like, and I've never really liked it because of its valuation, is Tesla. And we talked about this off stage earlier. It's unbelievable. I thought it was unbelievable that it was at 480 earlier this year, and it's unbelievable that now it's down in the 200s. I wish I had shorted it like I was thinking at 480, but that stock has been on a crazy roller coaster for years now, and I was in and out of it one time. Certainly glad I haven't been in it recently. Wish I shorted it though. So I guess the fact that I don't consider Tesla a magnificent company right now eliminates the Mag 7, but I do still like the ones I mentioned. I think Meta's a good buy. I like Netflix. I like Google. I like Amazon. NVIDIA is still got potential. It's been a little tough because of its valuation, but I think in the long term it'll be fine too. So in this crazy market, are you putting any money to work? If you were going to buy a stock, what would you be buying?
Honestly, right now, and normally I have probably a pick, is I'd probably just keep a little cash on the sidelines right now, and I'd probably just maybe buy some treasury bills right now. And I'm more aggressive most of the time, but I think just taking some of the cash and putting in T-bills right now, that might be decent. And just whatever you already have in the market, you've already kind of eaten the drop. You might as well just leave it alone if the companies seem to be stable. Nothing's changed. Like Intel today, they fired Pat Gelsinger. He had his 4 years of trying to turn around Intel, and it went up 14% today. But it's still got a long ways to go. And it's amazing that a company like Intel, which is the largest semiconductor manufacturer on earth, still struggles to make a chip. They still struggle to make something that people want, and Apple, Apple is making a decent chip right now. That new M3 and M4 chips, they're pretty effective, and people like them. So there's definitely competition, But right now, Intel needs to get its proverbial stuff together at this point. But I don't know. It's just, I think I'd be a little bit more cautious right now, because the volatility we're in right now is not normal volatility. Like, it's not a normal correction where I'd say start dipping your toes back in. So I think you might want to just hold off for a little while at this point.
Well, it is definitely feels different in a number of ways. But as I said, this can turn on a dime too, and all of a sudden we can rally hard. The Fed could start cutting, which might help the markets. We get through the tariff war for the most part, and we resolve things in Russia, and we could be looking really good. On the other hand, some of these things might not play out so well, and we could be going down a little further. So I think it goes back to everybody's position on where you're at, your age, what position you're in. If you're young, it's probably a great time to buy some of these stocks that are beaten up right now. But I wouldn't put all my money into it today. I would scale into it and buy some while it's at these prices, and you might get some a little bit cheaper. So, for somebody that's older, following what you're going to talk about, what you just talked about, Glenn, might be a good play to just hold on to some cash, put it in some treasuries, collect some interest or some decent rates out there. And, so it depends right now. But if I was going to buy, I'd buy some of the same things that I've been buying that I like Meta. I think it's a great buy right now. I just mentioned. I think you can buy Google right here. I think Netflix you can buy right here. But I also like Whirlpool, Boeing. Boeing, I like a lot. And even some of the autos, which you would have expected to get beaten up, have hung in there pretty good in the last couple of weeks. Ford and GM, especially when I speak of autos. I'm not talking about Tesla. Stellantis has its own issues, but Ford and GM, and Ford is paying a great dividend, and GM pays a small dividend, even though they just raised it, but they're buying back a lot of stock too. And the other one that I've talked about that's held up fairly decent in the last couple of weeks is Mattel. It was my pick last month, and they're going to open a theme park this year. And I think that's got a lot of room to run yet. So, hey, Glenn, thanks for joining us again tonight. And for more investing information, please visit our website at marketocracy.io. To learn more about our masters and their model portfolios that you can invest behind. Visit marketocracymasters.com. That's marketocracy.io and marketocracymasters.com. Thanks for listening, and please send any questions in that you might have. We'd love to answer some questions online during this podcast.
Thank you.